Okay, let's take a look at exercise 7-9B, and that will help you with your homework. So in this case here, Applied Business Systems has a small number of sales on account, but they're mostly a cash business, so they qualify to use the direct write-off method, which is a bit easier. So during year one, they earned 46,000 of cash revenue and $9,000 of revenue, keyword here, on account. So they've given credit to some of their customers. Cash operating expenses were $32,100 after numerous attempts to collect a $325 account receivable from JC Mims. The account was determined uncollectible in year two, and they wrote it off. So they'd like you to show the effects of those four things on their financial statements. So let's take a look at the grid here. So in the first case here, we do 46,000 of work for cash. So cash increases, we increase retained earnings. Anytime we have a number in this column that's not a dividend, it's going to need to appear in one of these two columns. So we recognize 46,000 of revenue, which pulls up my net income, and we have 46,000 of cash that flows into the company as an operating activity. Now, step two, we do $9,000 work of people on account. So accounts receivable goes up, we pull up retained earnings, we recognize revenue, which pulls up net income, and there's no cash flow associated with that. Then we have 32,100 of operating expenses that we pay cash for, so cash goes down, retained earnings goes down, we recognize the expense, which pulls net income down, and we have 32,100 that flows out of the company as an operating activity. So that's how we finish the year. So we total everything up. I make sure I've got the sum of these two is 22,900, so it equals this. I know I'm in balance. I've got 55,000 of revenue, 32,100 of expenses, so I have net income of 22,900. Add up my cash flows, I've got 13,900 net change in cash. So all's well. Now in year two, I decide that some of this 9,000, I just can't get it, $325 worth of it. So I write it off. So under the direct write-off method, I pull down my accounts receivable, because now part of it I'm not going to collect, and I pull down my retained earnings by recognizing an expense, which pulls down net income. No cash flow associated with that. So now I retotal, I make sure I've got 22,575 on both sides, and everything's okay. But again, notice that I've done not quite as good a job of reporting what actually happened in the business, because this $325 expense that I recognized in year two is really associated to this $9,000 sale in year one. So by doing this direct write-off method, I've failed a bit in terms of proper matching. So I've made year one look better than it really is and made year two look worse than it really is. So again, that's not a very big amount of money. It's probably not a problem. But if it were a larger amount, then it could definitely distort the picture of how we did. So hopefully you found that helpful. Please, again, send me an email if you have any questions. Thank you.